Thank you so much, guys, for joining in to our collective call. Today is Thursday, and we are happy to share two amazing projects today. Their pitch decks and Q&A that follow. So yeah, thank you so much for coming. We are Ivan and Malika, and we're hosting all the meetings. And yeah, let me introduce you our two projects real quick. So first, we got Musqet, and represented by David. And also there is a project called Auroca, and Bar is here to present it. So yeah, guys, thank you so much for coming again. Let me walk you through the rules, how we usually hold such calls. So a speaker usually has 5 to 6 minutes for the for the pitch part, and the Q&A is up to 10 minutes. Yeah, if you have any questions, just feel free to leave them in the chat or raise your hand. Works both ways. And yeah, again, thank you so much for coming. Appreciate that. Let's start first with David.
Sure thing. Thank you. So thank you for having me. My name's David. I run a company called Musqet. We're currently in our seed round, raising 5 million. We have 2.5 million committed at the moment, so seeking the remaining 2.5, and that's 5 million on a 15 million post-money valuation. What are we doing? Why are we here? Our whole ethos is to accelerate and promote and grow the adoption of Bitcoin as money, so as a medium of exchange. The way that we've approached this is because over a number of years, we've seen that actually there's not enough focus on Bitcoin as money. A lot of the focus on Bitcoin is as a store of value, and we fully believe in the transformative effects and impacts that Bitcoin can have both on individuals, businesses, and society. What we recognized in the market is that actually it's very difficult for businesses to accept Bitcoin today for payment for goods and services. So what we've done is effectively built inside out a business that you might liken to something such as Square or Stripe or Adyen. So the Square from the physical point of sale perspective, and Adyen or Stripe for online. So our proposition is threefold. Bitcoin is a core component of the payments. However, it's not the only one that we support. To our knowledge, we're the only company in the world that has launched a fully integrated self-custodial Bitcoin Lightning solution that includes Visa, Mastercard, Amex, other payment methods, and Bitcoin all through a single device. The solution also includes ePOS capabilities for merchants to undertake all of their staff management, order management capabilities, and any type of business, whether you're a small independent coffee shop through to a large international multi-store retailer could use our services. So really think of us as an international payment processor with the ability to add value-added ePOS and next generation business management tools. So that covers in-store. From an online perspective, there are cases where actually in-store solutions require online, but this really solution is targeted towards those who run an online e-commerce store. Again, we have WooCommerce plugins, hosted checkout. So anyone running a business anywhere in the world could plug into our gateway and use our payments. And that comes with Apple Pay, Google Pay as standard as well. And you can see there sort of our Bitcoin support. The reason we've done this is because, as I said, it's very difficult to accept Bitcoin as a payment method right now. Typically, merchants have a separate device. They have to train their staff. There's complex reporting systems. We cut through all of that, and we give people a single device, a single solution for them to use and run their business. They can manage their stock, manage all of their inventory, health, safety, and compliance. They can manage their staff and rotas to make sure that they've got the right people at the right time, and really run their whole business. The orchestration layer means that we can support online businesses globally and route ideally for lowest cost of operations and payment processing. So what we tend to do is target cost savings for every merchant on top of what they're currently experiencing, and adding Bitcoin in as a valuable component. We've got quite a number of customers live at the moment who have interest in partnership with Google. We're the only platform that is approved globally by Google as an ePOS partner. So we go to every exhibition with Google. We have some banking partnerships and a number of high street brands that you might recognize. Our objectives and goal is to become one of the best payment businesses on the planet, because by doing that, Bitcoin succeeds. And and the use and adoption and proliferation of Bitcoin as money succeeds. We're on track right now. We're already built, fully live in market. We're on track to be processing over 100 million in 2025, and that will be by Christmas. And then that will grow exponentially from there as we bring larger online platforms. Our pipeline right now sits at around about 300 million, and we have, so, it's reasonable to say that we would convert somewhere between 20 to 30% of that, and our biz dev will continue throughout the year. And yeah, the numbers, we always make revenue per transaction, so the numbers speak for themselves. And what it does, it gives us a great ability to innovate and reinvest in our Bitcoin capabilities. We've been featured in Forbes, a number of other magazines and online articles and journals. And as I said, we have a great team which comprises of ex-Visa, ex-Planet, and a very strong background in Bitcoin. So that is perfect timing. I'm out, but happy to answer questions that you may have.
Thank you so much, David. And yeah, thanks for being such on time. We've got our first question.
Sure.
Thank you. With such big traction and 320 million pipeline, what's the most unexpected industry or sector that's shown interest in integrating your solution?
Honestly, so it's a real broad range. Some people contact us because of Bitcoin. Some people contact us because right now we're trying to make a splash in the market. So we are competing with lower rates. So with how difficult things are in the hospitality, food and beverage industry right now, we're saving people money. But to answer the question directly, the most unexpected sector has been car parks. That's not necessarily because people want to pay for Bitcoin, for car parking in Bitcoin, but there's been quite a number of people calling us who own car parks and QR code payments by car parks, looking to be a little bit more efficient with their payments. Bizarre, but there we go. Nice bonus.
Yeah, very interesting. And also she asks, people also share us more your scaling plans.
Our scaling plans. So right now we're live in the UK and Europe. We are signing our expansion plan into North America and the Middle East at the moment. That will be helped and very much supported by the Google partnership on the basis that right now we have physical infrastructure that's required. We can ship these terminals to any bar or restaurant, but we have a fully digital proposition, which includes our ePOS capability, which allows, a screen here, this allows customers to order online or from a QR code, and all of that can be processed through the gateway. So we do have an option that then allows us to go into new markets very quickly without having to expend any capex on hardware and ship that to the location. So right now it's very much UK and Europe focused. Throughout the year, we'll be moving into new markets. I was just playing around here with the ePOS, so you can kind of see the look and feel of it. All very fully customizable.
Thanks. Tom is asking also an interesting question. If you could solve one operational problem today, what would that be? Well,
we do this right now. So the problems that customers come to us, they are very varied. Right now, customers tend to have 3 or 4 different providers. They'll have an ePOS provider, a payments provider, someone doing online, someone doing QR codes, someone doing staffing. So I guess the big thing that we do very well is bring all of that together. So a customer can get rid of 5 contracts. We bring all their data together. And that one thing that we're going to be doing in the next quarter is enhancing our analytics and reporting engine, which gives small businesses or businesses of all size much greater clarity on their profit per item and also their predicted profitability. So we can look at weather patterns and how that impacts potential footfall into a bar or a restaurant. And if they're fully staffed and they've got 10 employees, maybe they can send half of them home for that shift because it's been raining all day and the sun isn't shining. So little insights like that. We collect all the data. We're going to be doing that in the next quarter. So that will make the difference for some merchants on whether they make profit this week or this month, or whether they just break even.
Thanks. Another question from Tom. I do understand the solutions you're providing to customers. I was referring more to you as a team.
Oh, us as a team. Right now we're very well positioned. We've got a fantastic set of, as I said, the roadmap looks like, well, the bottom up roadmap's about 300 million. I've got the team out there sort of pounding the streets, picking up the phones. My engineering team are world class. We've got people from Swan Bitcoin that have left there previously and joined us, Lightning Labs. I've got people from Visa and Planet and other places. So we've got everything that we need. We just need fuel. We're on the runway. We're on the launch pad. We need that fuel to really explode. And to deliver that 300 million, I need to get people on a couple of people on flights, and having the burn rate to be able to do that over the next 3 months would be ideal.
Yeah, thanks. He also added about BD or marketing.
Yeah, well, so our Stu Barker is our chief revenue and chief commercial officer. He's scaled teams and exited a number of times over the last 20 years. I've never met someone who's more polished and drilled in terms of understanding go-to-market, sectors, presence, and our focus is very much hospitality, food and beverage, and online to start with, because that gives us the physical markets coverage, so where we can really demonstrate value add through the ePOS and the features, and the volume that we're actually attracting from online merchants. So Stu's doing a fantastic job in building that pipeline and scaling it, and that sales effort is really helping. Our partnership from a Bitcoin racing perspective is great. We're supporting their payments, and in return for that and a small contribution to their season, we will appear on the UK TV, 16 million viewers for their race season. So that's something that we're quite excited about. And a final point is we've just secured a brand ambassador partnership. For those of you outside of the UK, you may not recognize this chap, but he's a safe pair of hands. He's a barman. He's on TV in a dating show called First Dates. It's not a horrible dating show. It's quite a nice one. And Merlin also owns a pub. So he's a Bitcoiner. He understands the value of Bitcoin and the challenges that our ICP, our customer segment, are facing. So as someone, as a voice of the industry who can extol the virtues and values of our toolkit technically and the Bitcoin side, he works really well. So he's quite often on TV, on news outlet. And he's just a very nice guy to have as our brand ambassador. So we were delighted when he chose us or he said yes to being an ambassador and using our services.
Nice. Yeah, thanks. Another question: do you support escrow payments?
Sort of. It depends. It depends what you mean. There are industries where it's very difficult to make payouts. Bizarrely, furniture, season tickets, hotels, and travel. Anything where there's a deferred delivery. So if a customer buys something but doesn't consume it, and maybe there's 6 to 12 weeks until they actually take delivery or consume that item, there is often a portion of the funds that needs to be held back from the merchant until that's actually settled or that good or service is transferred. So it's known as effectively deferred delivery or rolling reserve rather than escrow. Depends on the use case. Escrow is something that we can support if it's, for example, for legal services and other things. But the big problem that we have as a business is we make sure that we do not act as a custodian. So ourselves as Musqet, we don't take the Bitcoin or hold it at any point. It's fully self-custodial. Same with the fiat processing. We're more of a technical platform pass-through, and our banking partners in the background are the ones who would supply escrow services. So it's something that, as a solution, I can look into. It's not overtly an offering, for example, to the legal sector right now.
Thanks. Another one from Peter. Great solution, David. How's your competitor moat?
Competitor moat. So right now, as I said, nobody in the world has done what we've done. It's very difficult. I would look a lot more relaxed and youthful if it wasn't so difficult. So I think our competitor moat is in my wrinkles and stress levels. However, if we ignore that for a moment and assume someone else could do it, there's nothing really stopping the likes of WorldPay, Elavon, and others from implementing Bitcoin. What they lack is a deep understanding and a philosophical belief that Bitcoin changes the world. So we have a very strong moat from a Bitcoin perspective, and we have all of these other value-added services. The benefit that we have is that we're building out a network of destinations for users to spend their Bitcoin at, as and when that volatility dies down. If we step away from the Bitcoin side, there's tons and tons of payment businesses, but there aren't tons and tons of of Squares, Zetals, and SumUps out there. So lots of people, payments is becoming a commoditized industry, a terminal and, interchange plus small margins, very, very fine. Where the whole payments industry is moving is, I think it's as a result of the actions of Square and others, is into the value-added services. So how good are you as a business at demonstrating value, giving customer support and solving their business problems? I think is the next wave of success that we're going to see from payments businesses. And that's exactly why we're doing what we're doing and positioned ourselves accordingly, because you have that trust, that relationship, the revenues flowing through your books as well as theirs, but also, so you have line of sight of all of that, but you have such a unique view of all of their problems, not just from cash flow, but all of these other things. So that relationship is something that we feel quite privileged to have access to. So solving all of those problems, it gives us, we've already solved a lot of them, but there's an enormous roadmap of things such as loyalty, reward mechanisms, cashback, and operational efficiencies that we can continue to build out over the next couple of years.
Thank you. Thank you,
I hate to interrupt. Let's wrap this up with 3 last questions because we're exceeding the Q&A time. It's a really interesting project. I totally agree. So yeah, let's wrap this up with the last questions. Malika, go ahead.
Yeah. Speaking about competitors, Morgan is asking, do you see Strike as a competitor?
With a K or with a P?
With a K, Strike.
Yeah, so sort of and not really. Strike, look, Jack's just got a new job, so congratulations there. But they are more focused on cross-border payments, the onboarding of Bitcoin, and Bitcoin between individuals. No one is doing this right now, exactly what we're doing. Strike doing fantastically well in their sector. They had a partnership with NCR, who are a processor themselves, an acquirer. It didn't go particularly well, or at least it was implemented well, but it just wasn't used. And what we've built here, and I think just to step back and a final point is, we're very bullish on the adoption of Bitcoin, but it only accounts for about 1% of our revenue. All of our revenue comes from Visa, Mastercard, Amex, and traditional acquiring services. So you asked about moat. Well, actually, against other Bitcoin and crypto businesses, that's an enormous revenue moat, because all of our revenue comes from traditional sources. Whether Bitcoin takes off as a payment method is almost irrelevant or not. We will continue to advocate for that, and we will do that without risk, because we can continue to innovate, build out in that space, and build all of these destinations for people to spend their Bitcoin, even if it takes 10 to 20 years, because our revenue pull through from traditional card acquiring is so strong that we can ride out bull markets, bear markets, volatility, adoption, anything. It doesn't really matter. We just stick to our core value. So Strike are not necessarily a competitor, but they provide that retail service. So they're the other side of our coin. People with wallets actually buying stuff through our terminals.
Thanks. Peter is asking, are you planning to integrate a token economy at some point?
No, tokens aren't something that we want to go after. I understand the broader digital asset space. This is very much a payments, ePOS, and Bitcoin only play. We may look at stable coins over Lightning, but our focus is very much Bitcoin only, and potentially stable coins. USDT over Lightning is possible, so it saves a lot of revenue, a lot of fees for both merchants and individuals in the international markets and international cross-border transfers. So that's feasible, but not tokens.
Thanks. And Pascal is asking, do you have partnerships with brands as rewards?
Not yet. That's our entire sort of reward strategy, and what we are going to do is integrate, again, a Bitcoin cashback ecosystem. So whenever users ideally pay with their Visa, Mastercard, debit card, credit card, they get Bitcoin back as a reward. And that will hopefully go both ways. We figure out the interchange rate, that will go back to an individual and also to a merchant. Our sort of brand and partnership strategy on rewards is one for sort of Q4 this year, Q1 next year.
Thank you so much, David. There is another question about scaling, but I think we've already covered this one. Thank you again, David, for the great pitch. Yeah, let's proceed with with the second project, right?
Okay, thank you so much. It was really interesting. Okay, we're moving on. Our second project here to pitch is Auroca, and Bar is here to present to you guys. So yeah, step in, passing the mic to you, man. Thank you so much for coming.
Thank you very much for having me. Nice to meet you all. Yeah, so we are coming from Auroca, Let me just share the screen quickly. Yeah, so we are connecting the traditional finance to the DeFi liquidity, NASDAQ on-chain, 24/7, permissionless access, with the lending, with the staking, with the borrowing and all the fun stuff. Obviously, there were many attempts to do that. That's not a new problem that we are solving. But I do want to take out of these 5 minutes, maybe 30 seconds, just to emphasize something. This is a result, and everything you're about to see, I'll discover here. It's a result of a 2 years process with a lot of market research, a lot of discussion with the likes of Deutsche Bank and DECA Bank for the more traditional side, and Cumberland, Wintermute, INX, Aerodrome, who was there, GMX, Base, Arbitrum, pretty much all of them, because we really try to understand the whole market with the pain points and everything and why it didn't work so far. And we just made it, we actually just wrote it down. So if anybody wants, we can send you the actual research after. Fair warning, it's 30 to 40 pages long. Basically, the mission, pretty simple. I think that in 2025, there's a clear market trend. You can see that a lot of entities are positioning themselves, institutions, whether in the TradFi or the Web3 side, for exactly that, to get into these tokenized securities, to resolve this problem of how do you bring securities on-chain and have them play ball with the rest of the crypto market. And we pretty much are the first company ever to figure out the way to do it, which is pretty cool. So yeah, the idea is really to bring the Teslas, the S&P 500 seamlessly embedded on Hyperliquid, on Helix, on GMX, etc. Now for the actual problem, by 2030, the market, based on the Boston Consulting Group and Ripple Research, the tokenized financial asset market is expected to have $18.9 trillion. And that is not currently accessible to the native crypto market through DEXs and DApps. The reason is that it's always come back to the problem of securities. There are tokenized securities are counted as security tokens, and those are classified and regulated under a financial instrument rather than cryptocurrencies, which means you have to be accredited investors and all the stuff that nobody in the crypto market likes to do. This actually caused those like backed finance, INX, Dinari, and the likes of them to have users, basically because they cannot be on DEXs, the user must come to their platform, to a designated platform, and nobody wants to change their trading environment just to trade stocks, basically. And definitely Wintermute doesn't want to build an API just to gain access to stocks on chain. Now, our idea is pretty simple. There is a new regulation called the Asset Reference Token. That's a classification actually within the MiCAR regulation, and that is a cryptocurrency regulation. And our mission from day one was to bring Tesla natively inside Hyperliquid. So Wintermute or Cumberland, when they are trading, if we want them to trade the token, they don't have to go out of the platform. They don't have to build a new API. They just add another token to their portfolio, basically. And same goes for all other traders. Why now? We can talk about it. But like I said, everybody, pretty much Kraken, Crypto.com got security broker dealer license, DECA Bank going into crypto, and this conversion between crypto and stocks. Wintermute and Cumberland are looking to trade both and go big on RWA this year. BlackRock, obviously. That's how it works in essence. We have an off-chain custody, interactive broker, Deutsche Bank, DECA Bank. We are tokenizing the asset, putting it on chain. Then through our partners, LPs come, they create a liquidity pool. Then users or market makers can access it on Hyperliquid, Morpho, and the likes of them. This is our estimation. That's the market size, 2.83 trillion in annualized trading volume in 2025. That's the prediction based on the current run rate, 141 billion SAM, and we are looking at 1.4 billion, which is 1% of the total trading volume for RWA, which makes a lot of sense considering the growth of RWA and specifically stocks, which is 540% year to year. There are a bunch of ways to make money here. Trading volume obviously pulls. That's the important part, I guess. How do we make money? So yeah, trading volume in liquidity pools and lending, that's APY based on GMX discussions with them, the average of 25% APY. Otherwise, because the stocks and bonds and all these assets all these tokens are 100% backed by assets, the assets are a property of the company and we can actually lend them. So the tokens are fully backed on one end and we can lend the underlying collateral on the other end, lend options against it, we get the dividends. So there's plenty of revenue sources here. There is a token play, there is a GTM. I can answer a question about all that and a bunch of good partners. And yeah, team members, if you have any question regarding regarding any of that, I can answer all of that. I would love to.
Thank you so much, Bar. We've already got some questions here. You're bringing NASDAQ on chain. What's the most exciting part about making traditional stocks available in the DeFi space?
The most exciting part, so when we did the research, we figured out, other than the fact that it's very romantic to, say that we are democratizing stocks and really breaking this chain between the traditional and the TradFi, and everybody around the world can access them. When we did the market research, we realized most of the DeFi market is actually run by, or most of the volume is by institutions rather than retail. So it just makes them a better target for us. What's exciting about it, for the first time, traditional institutions that so far didn't really, there is huge DeFi liquidity. There's a huge pool there. They cannot access it. They cannot access this liquidity because of a regulatory problem, and that we managed to resolve. We find a solution so they can generate more yield.
Thanks. Tom is saying similar idea concept of what was done with gold on chain. And what would you say is the biggest problem right now? Is it strategic partnerships with public companies, index, or facing regulation challenges?
So the problem of the securities market and bringing securities on chain, it was a regulatory issue. There is no some technological advantage here. There's nothing. That's not the edge. But since one of our co-founder is a former head of international affairs in the Israeli Security Commission and currently advising to the Dutch regulator, so we have very strong legal team there, and we managed to find a solution where we basically deconstruct the securities and then we tokenize them. So it's not a security before it's getting tokenized, and that's what gives it this accessibility. And I'll give you an example. You're probably familiar with Aerodrome, the biggest DEX on the base, one of the biggest in the world. And Aerodrome do have a permissionless Coinbase by one of the competitors here, actually, a token or tokenized stocks. And on a call with them, they just mentioned, look, it's nice to have it, but we cannot promote it. We cannot whitelist it. We cannot do anything with it, which we would love, but it's a security and your tokens are not. So we'd love to work with it.
Okay, thank you so much. And I can see we have another question, right, Malika? Okay, let me read that. The potential market for tokenized assets is huge. How do you see the role of decentralized exchanges evolving as more traditional assets come on chain?
Definitely the decentralized applications are very, very important. I think, again, part of the problem is, there is the synthetic version of tokenized securities, which is a bit risky, right? Because essentially you are trading an order book, something that is not there. The good thing about what we do is actually bringing something that is fully backed. So it cannot really depeg it. There is no way it's going to be Terra Luna 2. And then obviously, as more part of the research, we found out that more and more volume and capital within the crypto market moves towards DEXs and decentralized applications. Because on one end, users probably feel more free and more safe there, I reckon. And on the other hand, you have traditional institutions which can actually maximize their APY, because the APY in the DEXs are way, way higher than anything they know of in the traditional world.
Okay, thank you. Hopefully that answered the question. Peter asks, how does the Oracle work on weekend trading?
So over the weekend, because essentially the smart contract itself doesn't have a price feed embedded into it, because that would kill the arbitrage and all the fun and all the volume that we want to create, right? So because the assets are fully backed, essentially, I'll break it into one. We are working on make it really 24/7. The closest we got right now is 24/6 to be able to mint and burn the tokens, so users can come and redeem them 24/6, even when the market is closed. We did find ways to do it. On the how do we keep the price? Essentially, because the tokens are fully backed, they have value. Even if we don't have the price idea, there is value in the fact that you can always come back and redeem the token, or for cash or for the actual underlying assets directly from us. That gives this edge, basically. The market always stay in par with the price.
Yeah, see, totally. We got another one. Any challenges on bringing traditional finance with the decentralized world, and how have your partnerships helped overcome them?
Yeah, well, the biggest challenge was, again, the regulatory one, because it's not some crazy technological development, and we have managed to figure it out. So what we did, just to give you maybe a little teaser here, when you're taking a security and trying to bring it on chain, it's still a security, right? So we had to deconstruct what is a security based on the European Banking Authority definition. So we did that. And for example, and on the other end, we wanted to know what the market makers are actually looking for, the end users of our product are looking for, right? So we realized they are looking just for the exposure, for the price. They're not looking to vote in Apple board's meeting, right? So we went back to the other side of the securities and we said, all right, that's out. And we kept doing that in a few different ways till we got to the point that, all right, it's no longer a security. Now we can tokenize it under something that is not an e-money and it's not a utility token, it's just asset reference token and it's fully backed and it's on-chain. And the cool part of it is that we can actually allow the token holders to generate yield. So they can stake it. We're doing the easy to borrow. We lend the underlying collateral based on the staking that is done for the tokens. Then we are doing some rev share with the end user.
Okay, thanks. And maybe next, a comment from Tom that could bring a huge opportunity for arbitrage, which could be a great incentive for new users and institutions. And next question follows: are you the custodian of those assets, or how does it work?
Right. So we are the custodians. We are currently in onboarding with the DECA Bank and Deutsche Bank for that purpose, for custodying the underlying assets. That's part of the thing. So the underlying assets are not property of the token holder, but the token is pledged to the underlying assets by you. And we are obviously Austrian regulated, and we are using Chainlink Oracle actually to the POR, so to put the actual proof of reserve on chain to show that there is always, the tokens are always collateralized. Moreover, we are using mint locker of Chainlink, and we just got accepted to Chainlink build, so that's also pretty cool. And we are using their mint locker to make sure that we are never under collateralized, so we can never over mint tokens that we don't have enough collateral to back.
Yeah, right on. I think that's a wrap. Thank you so much, Bar, for your pitch. It was really interesting. For further questions, guys, feel free to refer to our contact details in the chat. And let's wrap this up. Thank you so much, Bar and David, for featuring on this call. It was really interesting.
Thank you.
Projects. Great session today. And you guys, if you want to be our next guest and pitch here next week or so, feel free to look for form for participation, which is now in the chat, and also a feedback form. And it was lovely to see you all here. Have a great weekend and see you next week.